It is 8:40 a.m. Pacific Daylight Time. It's the 5th day of the 5th month of 2026. This is episode 1314 of Bitcoin and where AI has not absconded with my job yet. That's going to be first up today. Coinbase cutting some of its staff away. Then Andreessen Horowitz has raised $2.2 billion in a brand new crypto fund. But that's not all. VC Haun has also raised $1 billion for crypto. Yeah. I know. But there's going to be a point behind those two stories. I promise you. Then we're going to get back to Bitcoin. Morgan Stanley going to talk about Bitcoin on U.S. bank balance sheets, and then Ripple. I know. I get it. I'm going to talk about Ripple. It's like the shittiest of the shit coins ever. But you're going to love this story. I'm not even going to foreshadow this son of a bitch for you. All right. So scholarship, the Satoshi Scholarship has opened, I believe, in Scotland, a Scottish school, I think. Yeah. Scottish school in Scotland. And FalconX and Sygnum partnered to launch tokenized credit. Yeah, I know. It's a little bit more shitcoinery than we want. But tokenized credit? I mean, equities, I get it. Tokenized other things, but tokenized credit. Let's go down that rabbit hole and see how many dead bodies have the potential to be strewn about the lair. Aave has filed an emergency motion against that law firm who wants to freeze the ETH that I told you about yesterday. So there's going to be a battle on that son of a bitch. And somebody else has filed a lawsuit. World Liberty, Trump's outfit, suing Justin's son. Because Justin's son filed suit against World Liberty, and now World Liberty is, well, firing back. But first, let's do Coinbase. This morning, Brian Armstrong, our favorite person that signed his name to the New York agreement to try to kill Bitcoin, has now killed 14% of his staff. Yep. Coinbase cuts 14% of its workforce, signals an AI-driven future, and I ask, as usual, what could possibly go wrong? Micah Zimmerman, Bitcoin Magazine. Coinbase announced a 14% reduction in its workforce on Tuesday, a decision CEO Brian Armstrong described as preparation for what he called a new way of working, built on artificial intelligence, not a defensive reaction to market conditions. In a company-wide email, Armstrong cited two forces behind the move: the persistence of crypto market cycles and a transformation in how AI has changed the pace of internal work. Engineers at Coinbase use AI to ship in days what full teams required weeks to complete, Armstrong wrote, and the pace of that shift is an acceleration, not a plateau. Coinbase had almost 5,000 employees as of December 31st, 2025, placing the number of affected workers at about 700 people. Departing U.S. employees will receive a minimum of 16 weeks of base pay plus 2 weeks per year of service, their next equity vest, and 6 months of Cobra health coverage. Ooh, anybody that's been on Cobra knows that doesn't work so well. Employees on work visas receive extra transition support. System access was cut on the day of the announcement, a practice Armstrong acknowledged as harsh, but defended as a matter of customer data protection. The cuts follow a pattern that traces to 2022. In June of that year, Coinbase eliminated 18% of its workforce. That was about 1,100 people as crypto prices fell and recession fears mounted. Then in January of 2023, a second major reduction of 20%, covering 950 employees, followed the collapse of FTX and a prolonged market contraction. Those two rounds of cuts killed headcount by more than 2,100 people, and each time Armstrong positioned the pain as the foundation for a stronger company on the other side. This round carries a structural argument the prior two did not. The 2022 and 2023 reductions were market responses. The 2026 restructuring is, in Armstrong's framing, an AI-driven redesign of how the company operates. He has fired engineers who refuse to adopt tools such as GitHub Copilot and Cursor after securing enterprise licenses for both, and has set a target of 50% AI written code at Coinbase. Again, I ask, what could possibly go wrong? The logic of the current cuts extends that mandate. If AI increases the output of a small team, a large team becomes a drag on performance. Oh, I got to come back to that shit. Hold on. The org chart changes Armstrong outlines are wait a minute. The org chart changes Armstrong outlined are broad. God, that's a terrible sentence. The company will flatten to no more than 5 layers below the CEO and COO. Every leader must carry an active individual contributor role, a player coach model, if you will. Cross-functional AI native pods will replace traditional team structures with experiments in one-person teams that fold engineering, design, and product responsibility into a single role. Oh my God, this is going to be awful. Oh God, could you imagine working by yourself in a company? This is not the physiology and mental structure of a human. Working by yourself is not good for you. Coin shares trade near $210 in pre-market trading, a fraction of the highs that the stock reached back in late 2024. Okay. I want to tackle this sentence right here. The logic of the current cuts extends that mandate. If AI increases the output of a small team, a large team becomes a drag on performance. How? I don't understand the logic here. That's not logical at all. If AI increases the output of a small team, then AI will increase the output of a large team. That's sort of more logical. This is the whole thing of like, okay, and I've asked this before, and this isn't mine. This comes out of Jack Spirko. Love the guy. He had a really great thing to say about this particular item. If you've got a company of 100 employees and you make, I don't know, let's say $100 million a year net revenue. Right, let's just 100 employees, $100 million a year net revenue. That makes the math a lot easier to work with. AI comes along, and there's literally 2 roads that you can take. This is the which way Western man meme, I swear to God. You can do one of these, you can take one of these 2 roads. One of them looks like this. You reduce your staff by 10% to 90 people to maintain the $100 million net profit or net revenue. We'll just call it profit, I guess. Or you can keep the same amount of people and increase your revenue to, I don't know, let's say $110 million, for profit. Which would you rather do? Well, there's a lot to be gained by keeping the same amount of people. First of all, you don't generate any bad blood with employees that lose their jobs, because guess what? That has a tendency to, cause bad blood. And they do things like try to abscond with the information from your company. And even if you cut them off immediately when the email goes out, cut off their access to whatever, to databases and whatnot, there's very real possibility that somebody in there was like going, I'm going to make sure that I got my shit backed up. And if I get fired, I want to not have to have it be that day that I decide to abscond with precious information. So I would already assume that a lot of employees have been, I don't know, taken screenshots, if nothing else, of whatever data that could be used against me or could be sold to whatever, right? So it generates no bad blood, and you get more net revenue. Now, it's not a guarantee that you'll get, more net revenue. I'm just saying that if your productivity can increase with AI, and that causes you to reduce your staff so that you can maintain what you're already maintaining with less staff, yeah, sure, your net profit will go up, but like, let's take it to your gross revenue. The gross revenue stays the same, so you're actually making more net revenue off the same gross profit simply because you cut staff. But if you keep the same staff, the gross revenue has a very real potential of going up, and therefore your overall net revenue also increases, and you didn't generate any bad blood. And there's a whole host of other reasons. I mean, the idea of a pod, an AI native pod that's cross-functional, replacing team structures, experiments in one-person teams. I'm sorry, but there's no such thing as a one-person team. The word team inherently has more than one person representing what's in the team. Otherwise, it's not a team, it's an individual. And not having teamwork in your company silos information really, really quickly, and it's almost impossible to pull the information out of that silo, especially if that guy says, I'm really bored at work because I don't have really that many people to interact with because I'm a one-person team. Again, this is not congruent with the psychology of a human. This is a fucking terrible decision. Will Brian Armstrong be successful at it? Yeah, sure. If we're just rating success by how much money you make, then yeah, sure, I guess. But what a shitty place to work. Oh my God, it's just, he's probably getting money from Andreessen Horowitz to do it because they got $2.2 billion in their new fund. They just raised it. They're saying crypto fundamentals are at an all-time high. This is out of CoinDesk, written by Aon Ashraf. Venture capital heavyweight Andreessen Horowitz, or A16Z, has launched another $2.2 billion crypto fund, doubling down on blockchain startups amid a surge in venture capital into artificial intelligence. The new vehicle, called Crypto Fund 5, will invest in crypto entrepreneurs at all stages with capital deployed over a decade, according to a company spokesperson. The firm said it is targeting founders building practical applications on crypto infrastructure, especially in areas like payments, financial services, and decentralized systems. The firm's partners see the current crypto market as an opportunity to invest in founders building projects that are durable and lasting even when the hype cycle dies down. Quote, we're at one of those quieter moments now, and the signal coming through is one of the most encouraging that it's been in years, according to a blog by the firm's partners published on Tuesday. Quote, the founders we're backing with this $2.2 billion fund are working on the part of the cycle that gets less attention and produces more of the lasting value, turning new infrastructure into products that people use every day, end quote, according to the blog. The fund will focus on sectors where these capabilities translate into tangible and lasting products. One of the areas where A16Z is seeing that pattern is stablecoins. The digital dollar market, which recently surged to $320 billion in market cap, has seen its adoption continue to grow through downturns, with users relying on it for cross-border payments, savings, and everyday transactions. This is particularly true when compared to legacy systems, which are slow, expensive, and unreliable, A16Z said, pausing to say, we've been saying that for the entirety of Bitcoin. Just putting that out there. Anyway. Other areas that are seeing meaningful growth include perpetual futures, blockchain-based lending, prediction markets, and tokenized assets. The new fund is launching at a time when venture capital firms are recalibrating their strategies amid an AI funding boom. Recent industry trends show generalist investors shifting capital towards AI startups, forcing crypto-focused funds to sharpen their positionings. And this is where A16Z is seeing the current use of crypto's role as a financial and coordination layer for AI systems as being more important than ever. Quote, software is getting more complex and harder to trust. AI systems are powerful and largely opaque. The infrastructure the internet runs on is more consolidated than ever. And in that environment, the properties that crypto networks were designed to provide become more valuable, not less, the blog said. While the new fund is almost half the size of its fourth fund, which raised $4.5 billion in 2023, it is still larger than the recent $1 billion raised by Haun Ventures, founded by a former A16Z partner, and $650 million raised by another prominent crypto VC firm, Dragonfly Capital. These recent raises are likely signs that while sentiment is not running as high as it did in 2021 bull market, there's a gap between the hype and the underlying activity. Quote, we believe while sentiment may be low, the fundamentals of the crypto industry are at an all-time high, according to the spokesperson. All right, so they mentioned Haun Ventures. So here's Tyler Warner from Decrypt. Crypto VC Haun raises $1 billion despite the market slump. Now, we're not going to read the whole thing, but there's a couple of things in here I want to get to. Katie Haun closed $1 billion for two new funds on Monday at a moment when crypto venture capital is in a genuine slump. April 2026 saw just $659 million in crypto VC funding across 63 deals, a 74% drop from March and the lowest monthly figure since July of 2024. Year to date, 2026 crypto VC stands at $5.6 billion, still fairly substantial, but down sharply from the pace set in 2025. Against that backdrop, Haun Ventures raising $1 billion is notable. The firm is one of the only crypto-native funds to grow counter-cyclically. Assets under management has climbed from 1 to 2.5 billion, while Paradigm, Pantera, and A16 Crypto have all seen AUM shrink since 2025's peak. The returns justify the confidence. Haun's first fund backed Bridge at a $100 million valuation before Stripe bought it for $1.1 billion and invested in BVNK at $678 million before MasterCard bought it for $1.8 billion, the largest stablecoin acquisition to date. The thesis exists across both exits. Stablecoin infrastructure would become essential financial plumbing, and the acquirers would be incumbent payment companies, not other crypto firms. The new fund expands that thesis to AI agents. Haun's argument is that AI agents will need regulated financial infrastructure to operate. That's wallets, payment rails, compliance layers, and the firms that built stablecoin rails are best positioned to build it. The fund's largest current bet is Erebor, Palmer Luckey's federally insured digital bank at a $4.35 billion valuation, designed from the ground up to serve AI and defense technology companies rather than retail consumers. Haun was clear she isn't pivoting. Quote, we're not becoming an AI fund, but AI agents will need regulated financial plumbing, and the firms that built stablecoin infrastructure are best positioned to build it. All right, so why bring shitcoiners to you in a Bitcoin podcast? There's a couple of things that I'm noticing here. VC funding, generally speaking, dried all the way up. And I'm not talking just for crypto and blah, 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 blah. It basically, like the collapse of Silvergate Bank a couple of years ago, when all that shit happened, we lost like 3 major banks, and 2 of them were essentially the banks being used by venture capitalists in Silicon Valley. A lot of money just dried up. A lot of liquidity that was usually generally available to tech bros kind of blew away in the wind. And then we start getting this huge downturn in Bitcoin starting October the 10th, 2025. And we've just been going down, 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 down. So we went from what, like 125,000 per coin down to like 68, or I think we bottomed out at like 65 or something like that. And it's looking better today, but that's not the point. The point is that in an environment where money dried up and we're looking at a bear market, because even though things, are looking better over the last couple of days, still a bear market. Sorry, it just is. Hopefully it'll end, because I like bear meat. I like it when bears die. Not the big fluffy ones that actually walk out in the woods. I'm talking about investor bears, of course. I do like it when they get, planted 6 foot under. It's always fun to watch. But they're able to raise money. These A16Z and Miss Haun, it's a killer name, by the way, were able to raise a collective $3.2 billion. And as we've seen, like $5.6 billion have been raised together. But all of this doesn't seem to be looking at spinning up new bullshit cryptocurrencies. This looks like they're targeting actual infrastructure, payment rails, lending, tokenized equities. And we can say what we want about these things, but I can tell you this, it's a lot better than a new shit coin. They're not, I think it's now shit coins are never going away, because we'll always have people trading, I don't know, whatever it is that they're trading. But I think the era of new shit coins spinning up, I think that one's over. It doesn't mean that one won't spin up, but 20 per year, 200 per year. I think there was 1 year in 2018 or between 2017 and 2018, like 10,000 different crypto projects like got spun up, and none of them had anything to do with infrastructure or anything, I don't know, of any kind of utility whatsoever. They were just grab your money, rug your ass, and run to the beach projects. And they stole the money from venture capital. They stole the money from anybody who like bought their coin, and there's no repercussions for most of them. They just took everybody's money and left. But now it looks like some money is starting to roll back in, and that's the point. But this time it's rolling back in to the underlying layers of this entire industry. And it's like and these layers are what bind Bitcoin to things like banking and lending and payments and credit and loans and all that kind of shit, right? It looks like they're funneling money into a glue to glue Bitcoin to the legacy financial system. So it could signal that we're coming out of a bear. That's why I wanted to bring you those two stories. Essentially, I think it really does mean that we might be seeing the end of this particular bear market, although I'm not convinced that this will be the last Bitcoin cycle that we see. Moving on to Morgan Stanley, Bitcoin on U.S. bank balance sheets is coming, but not yet. Atlas21.com. Amy Oldenburg, head of digital asset strategy at Morgan Stanley, told the Bitcoin conference in Las Vegas that United States banks could, in the future, hold Bitcoin on their balance sheets, but that the road ahead is still long. Oldenburg, appointed to this role this year, outlined how the bank is laying the groundwork for the expansion of its digital asset business in response to growing client demand. Among the main obstacles to holding Bitcoin on the balance sheet, Oldenburg cited the Federal Reserve, Basel rules, and the need to obtain approval from multiple global regulators. Without clearing these hurdles, an institution of Morgan Stanley's size cannot move forward. This is not an isolated position. BNY CEO Robin Vince stated in March that major financial institutions will lead the next phase of adoption, acting as a bridge between traditional finance and digital assets. In the meantime, Morgan Stanley has not stood still. The bank launched MSBT, a Bitcoin-backed exchange-traded product, and the first of its kind issued by a U.S. licensed bank. As further proof of sustained demand for regulated Bitcoin exposure, BlackRock's iBit product has accumulated over $61 billion in assets. Oldenburg also revealed that Morgan Stanley is pursuing an OCC digital trust charter, which would allow the bank to directly custody crypto and offer spot trading on its own wealth platform. The MSBT product currently uses Coinbase and BNY Mellon as dual custodians. So we've got head of digital asset strategy at Morgan Stanley basically saying we're going to have Bitcoin on our balance sheet, just not yet. And here's what has to be, what we've got to get past to do that. And that's what they have to get past to do that isn't the important part. It's Morgan Stanley making a statement, we want to have Bitcoin on our balance sheet. On our balance sheet. Not custody it for other people, although that is kind of can put shit on your balance sheet. No, they want it for they want Bitcoin. And they can't do it because of X, Y, and Z. That is a long, long, long way away from what it used to be, which was Bitcoin is poison. It's going to destroy everything, and we want to have nothing to do with it, which is what Morgan Stanley used to say, along with Goldman Sachs and all the rest of them. And now they're singing a completely different tune. About time they got clean. And you too can get clean with my friend SoapMiner at SoapMiner.com. That's SoapMiner.com. He makes handmade tallow soap. Oh my God. I love this soap, dude. This is the soap your great grandma used to make. Gentle, natural, and moisturizing. It's also free from anything toxic. These are humble soaps. And once you try these soaps, you will love these soaps. Get yourself clean at SoapMiner.com. Make sure you use code Bitcoin and you will get a 10% off of your entire purchase, but only if you go to SoapMiner.com and use the code Bitcoin and. Check his soaps out. I love this stuff. Cedarwood Tallow soap, I think, is his best-selling soap. I love this stuff. But it's not the only soap that he's got. He's got a pine tar soap. He has got goat's milk tallow, lemongrass, orange clove, lavender. He's got tea tree and peppermint and Earl Grey tallow, which is my second favorite soap that he has. And then redacted tallow. This soap has got pure ground carbon in it. It's you want to get nice and clean and also deodorize at the same time. This is also an excellent selection, definitely in my top 3 soaps. But special mention to Rough Cut Tallow soap. This is his base soap. Before anything else goes into it, this is his soap. 100% pure grass-fed beef tallow, lye, or also known as sodium hydroxide, and distilled water. Dude, that's it. There's no harsh chemicals. It makes your skin feel silky clean. And it's clean because it's clean, but it's silky because that beef tallow, it's like lotion, man. It's like if you've ever shook hands with a bread maker, you will know what I'm talking about because they're always using olive oil, right? Like good bakers are all, especially the guys that make the bread, when they need it when they're kneading it by hand. And we're talking, you got to go to a small bakery for this, but you touch their hands and they're freaking soft. And it's because of all the natural oils that their skin is exposed to all day long. This is that. This beef tallow is a natural but animal-based fat. And it's like lotion, man. So you're doing 2 things at once. You're getting your skin clean and you're lotioning up. I use this stuff to wash my hair. Seriously. And if you've ever washed your hair with a bar of Irish Spring, you know how bad that is. This is not that. This soap I can use as shampoo and it's beautiful. It conditions my hair at the exact same time that it's cleaning my hair. Go to SoapMiner.com. That's SoapMiner.com. Use Bitcoin and for a 10% off of your entire purchase. Now, This one, I love this one. So before we run the numbers, let's get to David Schwartz. May the Schwartz be with you. Ex-Ripple Chief Technology Officer reveals that he sold 26 million XRP for Bitcoin. Only holds Ripple stock to sleep better at night. This is out of stockwits.com, I guess. I don't know. I'm actually getting it through tradingview.com, but yeah, what it is, what it is. A top insider at Ripple is dialing back risk just as crypto markets heat up again. Former Ripple Chief Technology Officer Emeritus David Schwartz said he sold 26 million XRP for Bitcoin, not crypto, not Ether, not another shit coin. Now, he bought Bitcoin with it, a move that says lets him sleep better at night, even as crypto bulls chase the next rally. He holds limited exposure, he said, in a series of posts on Monday, and he means limited exposure to crypto. The former Ripple CTO, who joined the board of directors last year, explained that he has shifted most of his assets away from cryptocurrencies, adding that he is comfortable foregoing potential gains in exchange for lower risk. He added that his remaining exposure comes through owning Ripple stock, not tokens. Quote, I fully recognize this crypto may be a once-in-a-lifetime chance to get rich, he said, but he noted that his current approach is helping him sleep better at night. In a separate post in a thread from David Schwartz, Schwartz noted that he had sold 26 million XRP in exchange directly for Bitcoin. He explained that when XRP was trading at 10 pennies, the value of his holdings had reached millions of dollars, which was risky, and that he very much did not like it. He said that his primary exposure now comes through Ripple equity held in private markets rather than directly through cryptocurrencies, which he views as more volatile and higher risk, and he just opted out. Schwartz explained that his stake in Ripple provided indirect exposure to the crypto sector, which he considers sufficient, allowing him to avoid price swings associated with holding tokens directly, tokens like XRP directly. He added that he would likely hold more XRP and other cryptocurrencies if he had less exposure through Ripple equity, emphasizing that most of his broader portfolio remains conservative. And they go on a little bit more about David Schwartz. Okay, so if you don't know who David Schwartz is, he was one of the co-founders of Ripple Labs, and therefore XRP. They are the same thing. I don't care what the people at Ripple have said. Ripple Labs is XRP. I'm sorry, that's just the way that it is. They've tried to separate it for legal reasons, but Ripple is Ripple Labs, or XRP is definitely Ripple Labs. So he was one of the co-founders. And him and I can't remember the other idiot that's behind Ripple. I can't remember his name right now. Basically bagging on Bitcoin. Ripple's better. Ripple's going to replace Bitcoin. It was the same shitty narrative that you hear out of all the crypto bros. And here he comes selling 26 million XRP tokens directly for none other than Bitcoin. That should tell you everything that you need to know if you're still a shitcoiner. Stop shitcoining. Sell it all for Bitcoin. Hold the Bitcoin. Let's run the numbers. CNBC, futures and commodities. Well, energy being raked over the coals again this morning. Brent North Sea down 3.43%. West Texas Intermediate down 4 to $102.12 a barrel. Natural gas down over 3 points to $2.77 per thousand cubic feet. And gasoline is down 3.18% to $3.61 a gallon. Murban crude itself is down 1 1/3 points. Metals are all in the green because they're always trading on the opposite side of oil. So palladium is up 2 1/4. Gold is up a point to $4,576.03 an ounce. Platinum is up 0.8%. Silver is up almost a half to 73.84, and copper is up 2.7. Ag is fully mixed this morning. Chocolate is up just at 5%. And the biggest loser today is wheat, 2.3% to the downside. Live cattle up a half, lean hogs moving sideways, feeder cattle up 1.4%. The S&P is up 0.7, NASDAQ is up 1.3%, the Dow is up a half, and the S&P Mini is up 1.3%. Bitcoin chilling at $81,460. That's a $1.63 trillion market cap. And we can now purchase 17.8 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,024,929 and 1/4 of. Average fees per block are normal. There's about 35 blocks carrying 28,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priorities get you in at 0.4. And hash rate, still steady. 954 exahashes per second. That's everything that I could ever want in the security of my Bitcoin network. From lies and rumors of lies, yesterday's episode of Bitcoin and Jub with 1123 sats says, what is worse, war fighters or peacekeepers? I don't know. I've seen some pretty shitty peacekeepers before, but I'm still wigging out about this word war fighters. It giving me the willies, man. Jason High with 250 says nothing. Nick Dose with 205 sats says cheers. Right back at you. Let's see. Noster Gang with 113 sats says sister. Okay. Sure. I don't know what you mean, but hey, we'll go with it. That's the weather report. Welcome to part 2 of the news that you can use. Bitcoin-funded Satoshi Scholarship opens Le Mans School doors to global students. Bitcoin Magazine's Micah Zimmerman. Le Mans School in Helensburgh, Scotland, has launched a fully funded Satoshi Scholarship, extending its experiment with Bitcoin from the payments desk into the heart of school life. The award will cover 2 years of tuition and boarding at Burnbrae, the school's boarding house, for one student who would struggle to access this kind of education without support. Applications are open worldwide with a deadline by May the 24th. So if you got a kid that you want to send to Scotland, you might want to get on the stick. The scholarship follows a year of rapid change at Le Mans, which became the first school in the world to accept Bitcoin for tuition from autumn 2025, and some parents already pay fees in Bitcoin, and the school has begun building a Bitcoin treasury funded by donations from supporters in the wider Bitcoin community. School leaders describe this as the early stage of a saving strategy shaped by ideas of sound money and long-term financial resilience that runs through Bitcoin culture. BTC now runs through the campus in more literal ways as well. Le Mans operates its own node, as well as several mining units, which both support the Bitcoin network and supply heat to classrooms. This is brilliant. A live mempool display in the study and library gives students and staff a window into transaction activity on the network, turning an abstract protocol into something that they actually see during the school day. Alongside the hardware, the school is working with economist Saifedean Ammous, author of the Bitcoin Standard, to build a curriculum that blends Bitcoin with Austrian economics. The course aims to give pupils a structured introduction to concepts such as sound money, time preference, and capital formation, framed through BTC's design. Supporters see this as a way to prepare students for a financial system in flux, though some education watchers question how far a school should go in aligning itself with one monetary thesis. The new scholarship sits at the intersection of those ambitions and a more grounded concern about access. Open to day and boarding pupils from senior 1 up to upper 6th, and I have no freaking idea what that shit means. It is expected to appeal in particular to students starting the 2-year international baccalaureate in lower 6th. Candidates will face standard admissions checks and a means test, and the eventual recipient will be expected to serve as a role model and active member of the school community. Principal Claire Chisholm said that the donation behind the scholarship shows the level of interest in the project from across the global Bitcoin community. For families and students who share that interest, Le Mans experiment offers a chance to study in an environment where debates about money, technology, and the future of the economy are part of the daily routine rather than a distant topic. More information and application details are available at the school's website. Go to lemondschool.com. That's lemondschool.com. LOMOND is how you spell Le Monde. Next up, FalconX and Sygnum partner to launch tokenized credit for institutional clients. Jason Shubnell from The Block. Crypto prime broker FalconX is teaming up with Sygnum Bank to deepen its push into tokenized credit. Sygnum clients will gain access to its on-chain structured credit facility, a tokenized, over-collateralized lending product designed to give investors exposure to digital asset credit markets through a regulated banking channel, according to a release shared with The Block. Swiss-based Sygnum will act as lender of record via its Designate platform, effectively wrapping FalconX's crypto-native credit strategy in a familiar regulatory framework. The goal is to create something that looks and feels closer to traditional fixed income, even if the underlying rails are blockchain-based. FalconX's facility extends credit through a special purpose vehicle backed by over-collateralized loans and monitored in real time. M11 Credit and Pareto will handle administration, collateral oversight, and vault infrastructure, while compliance tooling is layered in to meet institutional standards. The product won't be available to U.S. investors. Participation is limited to eligible Sygnum Bank clients and is subject to jurisdictional eligibility requirements. Quote, tokenization is transforming institutional credit, and institutions are increasingly looking for structured, transparent ways to participate in digital asset lending markets, said Austin Reed, global head of revenue and business at FalconX. Quote, this partnership extends the reach of on-chain institutional credit through a premier digital asset bank and establishes the blueprint for regulated adoption globally, end quote. The partnership adds another tokenization use case to Sygnum's platform at a time when banks are increasingly experimenting with blockchain-based financial products. Quote, it is encouraging to see how rapidly financial markets are evolving on-chain, and we remain committed to supporting our clients as this new financial infrastructure develops, said Fatmeyer Beckery. Fatmeyer. This is a great name, man. He's head of tokenization at Sygnum, the Swiss-based digital asset banking group. FalconX is backed by Excel, American Express Ventures, Lightspeed Venture Partners, Thomas Bravo, Tiger Global Management, and Wellington Management, among others. Last May, FalconX partnered with Standard Chartered to boost crypto offerings for institutional clients and later rolled out 24/7 over-the-counter crypto options trading platform. The firm also acquired the $11 billion asset manager 21 Shares. So tokenized credit. And after reading that, it still makes no freaking sense to me. Other than somehow or another the collateral is linked to the blockchain. But I mean, tokenized collateral, okay. That I can see. What's the tokenized loan? See, I mean, FalconX is kind of big and Sygnum is kind of big. So it's not like we can just dismiss the activity of these two. But this is what I fear. No, I don't fear it. I actually don't give a shit because I have Bitcoin, so I don't care. These assholes can play with whatever they want to play. But what I was saying about Haun Ventures and A16Z kind of representing maybe a shift, and maybe we won't see scam coins, just basically be spun up through all this VC money that was free flowing and is no longer free flowing, and going into more infrastructural layers. Yeah, see, now I'm getting worried for people out there who just look at, oh, it's tokenized, so therefore it must be good, because that is that's the exact same sentiment that people that did not take the time to study this stuff thought about the next Bitcoin back in from 2017. Well, actually from 2016 to, like, I don't know, I think the whole thing collapsed with FTX. So we'll put it at 2020, 2021, 2022, where they were just looking for the next shitcoin to be spun up. And there was a lot of them, like tens of thousands of them. Right. But now I think that what's going to happen is you're just going to see the word tokenized everywhere. It's like, I might as well go ahead and start up my own coffee company and call it tokenized coffee. Because it's going to be that same fervor, that same irrational exuberance that got everybody into trouble with the shit coins. Now it's going to be with tokenized everything. So just be aware, be very careful, just buy Bitcoin and hold the damn Bitcoin. Next up, Aave files emergency motion to lift the restraining notice on frozen ETH. Stephen Cotti, Cointelegraph. Decentralized finance protocol Aave filed an emergency motion on Monday in New York to vacate a restraining notice from a U.S. law firm aimed at blocking Arbitrum DAO from transferring 30,766 frozen ether to the victims of the kelp exploit. Gerstein Haro LLP served Arbitrum DAO with a restraining notice on Friday, arguing its clients are owed over $877 million in default judgments against North Korea. The law firm claims the North Korean hacker group behind the kelp exploit had possession of the tokens, giving its clients a legal claim over the ether, pausing to say, I told you about this yesterday. So this is where they basically are saying, okay, well, we've got the right to completely restructure your importance in the food chain just because of X, Y, and Z, which I don't think they should be able to. They should not have that power. A law firm should not have that power. Now, a federal judge, I could see that. I still don't think that that's right. But, this is, they're talking about North Korean hacks that happened in 2015, 16, and I can't remember. No, 2010, 2015, and 2016. The ether that is or the ether in question right now, this happened on April the 18th. Years after this, what this law firm is claiming, they're basically saying, hey, look, because we've got these claims on North Korea, because they are involved in this hack, you got to wait. And it's just, you shouldn't shitcoin, and you sure shouldn't put anything on DeFi. But dude, really? Can I start doing this? Can I go get a law degree and build a law firm and just start telling people, hey, yeah, I know you got hacked yesterday, but you're at the back of the bus because something we did 10 years ago. Dude, not right. Anyway, Aave filed the emergency motion in a New York district, saying that a thief doesn't gain lawful ownership of property by stealing it. It also argued that North Korea is only suspected of being part of the theft, and that the law firm's argument, quote, defies logic, common sense, and the law, end quote. The Arbitrum DAO has been voting on whether to release the ether to assist DeFi United, an industry-wide coordination effort to make RS ETH holders whole and help restore RS ETH's backing following the almost $300 million Kelp DAO hack on April the 18th. Voting ends, by the way, on Thursday. Let's see here. Here we go. Aave argued that if the court upholds Andreessen Horowitz's notice, it could deter future recovery efforts for North Korea-related hacks because of the possibility of additional legal challenges to recover said funds. It further argued that it could incentivize bad actors to target yet more crypto protocols. Oh, honey, that's going to happen regardless of what you think is going to happen. Anyway, Aave's lawyers warned that the delay is causing irreparable harm to the protocol, its users, and the wider DeFi community, quote, none of which can be later cured by monetary damages. Quote, if the immobilized assets remain subject to a freeze and are not made available to restore value to Aave protocol users, the entire DeFi ecosystem risks being destabilized, Aave's lawyers said. Now, here's a screenshot that's got a couple of things in it here. Quote, while Aave protocol users cannot retrieve their assets from the Aave protocol, if those assets were being used for collateral for other positions elsewhere, then continued restraint on the immobilized assets may render those users unable to meet their related collateral obligations. And then, a little further down, it says, in fact, plaintiffs' theory would encourage hostile actors with judgments against them, including hostile state actors, to engage in further thefts, if assets stolen in those exploits could be used to satisfy past judgments, or even simply to inflict costly legal battles on innocent third parties for political gain. Both these things are really interesting to look at, taken separately. First of all, the notion that I could have some kind of weird shitcoin on the Aave protocol doing whatever it is that it needs to do, and I've got a loan against it, and all of a sudden that asset is frozen, then yeah, I'm put in one hell of a pickle. Because let's say that something happens in the markets. Let's do something simple, like I don't know, a 20%, 25% drop across all the shit coins, and all of a sudden those assets cannot be liquidated. They cannot be liquidated, which actually kind of makes it a little bit better, because they're freezing those assets, right? They're frozen. They cannot be sold. But if I want to extinguish this debt, I also can't do that because the same funds that are the same collateral is also frozen. So Aave's lawyers actually make sense. A lot more sense than the lawyers from Andreessen Horowitz or whatever that law firm is, but whatever. Let's continue. They further argued against Andreessen Horowitz's claim that its clients have a right to the frozen ether, and also said that the case is based on unsupported conjecture that the thief is in North Korea. Quote, plaintiffs in this case showed up contending, based on conjecture from posts on the internet, that the thief was in fact North Korea, and that by stealing the assets for a few hours, North Korea somehow became the rightful owner of those assets, such that the plaintiffs here could restrain them for their own purposes, lawyers for Aave said. Quote, the immobilized assets do not belong to North Korea or any affiliated entities. Instead, the immobilized assets belong to the users of the Aave protocol who were victimized when a third-party thief effectively stole their assets during the cyber exploit April 18, 2026, end quote. If the court can't immediately vacate the notice, Aave's lawyers are requesting that Andreessen Horowitz pay a $300 million bond to maintain the restraining notice until a decision is reached. A judge has not ruled on the emergency motion yet, and a hearing date has also not been scheduled. Andreessen Horowitz has filed similar cases in the past, arguing its clients have a claim to funds stolen by North Korea and frozen by crypto firms, including assets from the 2023 Hecko bridge hack and the 2025 Bybit exploit. That's the end of the article. But this is sticky. It is a legal quagmire at this point. The notion that you could say, hey, because the same country that hacked these coins also hacked coins from 10 years ago, your coins are now basically caught up in our lawsuit. We're just going to abscond with your property rights simply because we filed a frickin' motion in a court. I don't want to get into the fact that this is about a shitcoin. I don't want to get into the fact that this is about a DeFi protocol, which you shouldn't be using anyway, because it's all bullshit and it's all garbage. Yes, we completely agree on that. But this is treachery at its deepest level. This is ambulance chasing at its deepest level. I've never heard of anything like this before. Okay, I got an active case going on against North Korea, which is never going to be settled. It's North Korea. What do you think? They're actually going to come to court and argue? No, they're giving you the finger for the rest of your existence. That case is just going to be a standing albatross around everybody's neck. So now, anytime North Korea is involved in anything, even speculatively, Gerstein Haro can just write a restraining order on it and say, well, nope, those coins are now, our clients because it was North Korea. Translate that to just fiat money. Hey, I made this investment in this company and something bad something bad happened. That company got hacked with my dollars. I want my dollars back. And here comes Gerstein Haro saying, whoa. No. Those dollars that are yours? No. Now they're our clients because we've got the hacker that hacked that company that you were invested in. No, they hacked a couple of other companies that we represent. So now your money in that company that's completely unrelated to these companies that got hacked 10 years ago, that now they're ours. They're our clients. And our clients need to be paid first. What kind of logic is this? At this point, Gerstein Haro, and I'm not making an accusation here, they could possibly maybe contract some hackers, from North Korea on the down low, of course, so that nobody knows that they're doing it, and say, hey, go hack all these DeFi protocols. That way we can just sign letter after letter after letter because, it's from North Korea. But our clients from 2010, 2015, and 2016, they come first, so your coins are not yours anymore. Or your fiat dollars are not yours anymore. This doesn't even. I've got to get off this. I'm sorry. I promise. I'm off it. I'm off. World Liberty sues Justin Sun for defamation in WLFI dispute. Cointelegraph Zoltan Vardai writes it. World Liberty Financial filed a defamation lawsuit against Tron founder Justin Sun in Florida, escalating the legal fight between the Trump family-linked crypto platform and one of its largest investors. The lawsuit, filed on Monday in the 11th Judicial Circuit Court for Miami-Dade County, accused Justin Sun of making false public statements about World Liberty and violating WLFI token sale terms through alleged prohibited transfers, short selling, and straw purchasing. The lawsuit also accused Sun of spreading defamatory statements surrounding the crypto platform, demanding a court-ordered retraction and compensation from the founder. Sun denied the allegations in a Monday post on X, calling the lawsuit a meritless PR stunt and saying that he looked forward to defeating the case in court. The lawsuit comes less than 2 weeks after Sun sued World Liberty over the freezing of his WLFI tokens, a dispute that has intensified scrutiny of the project's token controls and governance structure. The escalating legal battle follows a period of growing backlash towards the crypto platform, which came under scrutiny for a proposal seeking to add a further 2-year lockup period for early investors holding the WLFI token. CoinGraph reported that on April the 16th. Sun called the proposal, quote, one of the most absurd governance scams I have ever seen. Yeah, that's probably where the defamation comes in. U.S. President Donald Trump and his sons, Donald and Eric Trump, are listed as co-founders of the platform. Sun's WLFI token address was blacklisted in September 2025 after blockchain data platforms flagged it for a roughly $9 million transfer. Sun said his pre-sale tokens were unreasonably frozen and urged the team to unlock his investment. However, the lawsuit claims that Sun was, quote, fully aware of World Liberty's right to freeze users' tokens to protect its token holders and its community, and that he agreed to it in the project's terms of sale. Quote, rather than acting in good faith, Justin Sun chose violence. Justin Sun chose to defame World Liberty repeatedly, publicly, and to millions of followers. Tom Clare, attorney for World Liberty Financial, claimed, adding that the lawsuit was a last resort measure seeking to protect its token holders and employees. The lawsuit claims that Sun previously agreed to WLFI's, quote, freezing authority before publicly calling it a hidden trapdoor in a calculated effort to harm World Liberty while potentially benefiting his own financial positions. The lawsuit adds to WLFI's prior governance concerns after a March vote showed that 76% of the voting power came from only 10 wallets. Sun called that an alarming sign of concentrated influence. WLFI clapped back and accused Sun of spreading baseless allegations to cover up his own misconduct and threatened legal action. So another legal mess. And all this goes to show that DeFi cannot be trusted because DeFi stands for decentralized finance and is clearly not decentralized at all. Between Gerstein Harrow and the freezing authority of the Trump WLFI thing, it's not just these two protocols. They all do it. They all have freezing authority. They can all freeze whatever tokens they want on whatever DeFi platform you're on. It's been that way since SushiSwap. Since the very first instance of anything remotely resembling DeFi, freezing authority was always there. We've seen it again and again and again and again and again. And the only thing that's shocking about this is how shocked these people are when they actually get their shit frozen or taken or stolen or hacked. How did you not know that any of this was on the table? Be really, really concerned with where you put your money. Between lawyers able to write letters to judges and have entire sums of money completely unrelated to a case that particular law firm is fighting frozen so that you can't access it, to Justin Sun, I don't know, not reading the EULA, it's a mess. And you know what's great about this? I'm sort of like David Schwartz. I sold all my shit for Bitcoin. I sleep better at night. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.